We are almost out of time. Any last comments or suggestions? Chris, I'll ask you one thing. What chart do you look at and say, looks like we're now officially on the road to recovery?
When prices stop falling.
Well, let me jump in on that, by the way. Prices are going to fall for sure between August and December. They always do. I mean, that's a seasonal...
Oh, I'm sorry. When seasonally adjusted prices stop falling.
I'm not done. I'm not done because, you know, the fact of the matter is you've already had an over-adjustment on prices in some areas.
Whoa. Over-adjustment?
Let me finish.
Oh, man, we're almost out of time.
You know, try to, again, those prices you were showing.
Yes.
You got those prices. I don't think at the very bottom end, in the worst marketplaces right now, you're starting to have a situation where you're having overbidding. You're getting 10 or 12 offers, multi-offers. So the prices, in fact, in some neighborhoods are actually already stabilized. It's very small, but even there's parts of Fresno. So you're starting to get the first signs. Now, if you're in the more expensive areas, I think they got a long ways to go, actually. I think it's the reverse pattern that we saw for the last 2 or 3 years. But I think you're actually starting to create that floor. And it's not only the seasonal adjusted aspect. The fact of the matter is, at some point, you know, again, depending on the economy, you wipe Fannie and Freddie out, prices are going to drop another 25% in every area. So it all depends on exactly, you know, what happens. But again, I think the signs are there. And typically what happens is we don't realize it until afterwards. And the signs, you know, how much more housing can you exhaust is really the question. There's not, the difference between us and Florida is there's not an overhang of new housing. It makes a big difference.
I disagree completely.
Well, again.
So two points, just very quick. First point is...
I'm glad I'm between them.
Yeah, you shouldn't be. 2 points. First thing is we have way too many 4,000 square foot houses. That's not what the state needs. The state desperately needs low-rent apartments for low-income people. That's what the builders should be building.
Let's just make duplexes out of them. Heck with it.
Yeah, well, there you go. Actually, not a bad idea. And you probably use something for the garage, too, right?
By the way, Chris, this will be the first year since 1986 that we'll build more multifamily than single-family homes.
It's about time. But then the other thing, but that's because single-family are down, not because multifamily's up. So keep that in mind. The other thing is unemployment rate 7.3% and rising rapidly. And we do not ignore that. There's a whole other part of this cycle that's coming down on us. And, you know, we can disagree on the statistics all we want. The fact is whatever stability you may see is going to be severely threatened as this economy.
I agree. And I said that was one of my 2 wild cards. Because I happen to agree with you. I'm hoping it's doldrums. You think it's worse. You know, and if it's worse than doldrums, I agree. But again, you're starting to see, you know, it's a very sticky market. Markets are local. I mean, you know, part of this discussion we have here is we're talking in these grandiose terms, but every market is local. I don't think there's any real market of any size where prices haven't come down. But let me assure you, there's a huge difference between San Bernardino and South Bay or the Peninsula in San Francisco. The price differentials there are huge. And I don't think it's tied, by the way, to the size of housing, because by and large, in those areas, larger homes have done as well as smaller homes. So again, the localities where you're starting to see stabilization are definitely in jeopardy. But by the same token, most people miss the bottom. And I suspect many of us will miss it again.
I'll just mention, we're kind of got to wrap it up. That list that you saw is interesting. Many of those had multiple bids, just so you know. We ended up being the winning bid, not because we were higher than them, but because they knew we would close because we were paying cash. So the multiple bids were higher, but they didn't get it because of the financing problem. But what we honestly have noticed is now we go 2 months later, what we were having to bid on up to 110 is honestly now 85. It really is. So that number is declining. And it's scary as an investor, as we know. We buy something we think is a sweet deal, and then 60 days later, we got a comp that's 20 grand less, and it's consistent. The other thing, and this is almost the last point we get to make, is I don't know how you have a positive market, I'm not trying to be negative, when you have twice as many bank-owned properties heading back as you're selling. That's a problem we've never faced before. At the very worst, in 96 and 97, we had twice as many sales as trustees' deeds Now we have twice as many trustees deeds as sales.
No, that's not true.
Well, it isn't, it is in Riverside, it is.
Oh, yeah, it may
Okay.
be locally. Again, from the state level, we're looking, and we can argue about this, somewhere in the mid 200,000 ranges, and our current range of sales is in the mid 400,000 range. And again, my comment was I'm shocked by that many non-foreclosures selling, because a lot of the rest of those obviously are short sales. So you've got a distressed market that could be 75% statewide. But the fact of the matter is, if you can stay in the 250,000 range, that gets absorbed. If it goes up to 400,000 simply because prices are so low, then I think you have a much more serious problem.
Yeah. Yes, last comment.
You brought up the taking away the number of max finance properties earlier. And
Yes.
there are portfolio lenders out there that are coming to the table with that financing available. 30% down, 5-year fixed rate financing, and no limit for investors. These are all non-owner occupied properties.
What's the rate?
In the low 7s, high 6s right now.
Okay, that's great.
Typically a one-year prepay.
Okay. I want to thank all of you. This has been a very extraordinary evening for everything. Thank you.